Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking crude oil. In the energy quadrant, massive rollback on price in WTI. WTI gave back yesterday's gains, which were just short of 2% and more on the lows. We got below 68.50 on the low end with a little bit of a late bid, taking price back up above 69 as the day rolled on. But again, all of yesterday's gains and more basically taken back by the market. We had the Keystone XL pipeline, which had kind of lost its headline status in the news, green lighted by the State Department. The section of it that's going through Nebraska apparently has been ruled as safe for the environment and for wildlife, so that particular part can begin construction, or rather complete construction. The construction had already began, halted by the EPA and their analysis of the environmental impacts of that section of the pipeline, but it was green lighted by the State Department. Now there still are court cases that are going to try and put a halt to that section of construction, citing those same concerns that the State Department has already green lighted. But that was a big part of the sell-off that we saw today, because the Keystone XL pipeline will obviously provide for more capacity, which has been much discussed. Now that's capacity for the Canadian oil sands coming down through the U.S., heading to Cushing and heading to the ports in the Gulf Coast, which will mostly be exported, some of it being refined and used here, and some of it being refined and exported as refined product. So that is a supply excess if that pipeline gets completed. And then additional pipeline news out of the Permian. Some of the Permian Basin pipelines are getting expanded in terms of the width of the pipeline. You can't speed up crude oil going through a pipeline. Travels at 11 miles an hour, and it's not going to go any faster than that without heating the crude up and damaging the actual product. But they can widen the pipelines in certain areas and create capacity, and they're doing that, and they're also creating newer pipelines to get some of that shale oil out of the Permian that's been sitting in tanks and also can't make it to the Gulf Coast to be exported and to be refined and exported as refined product. That's one of the reasons WTI is discounted to Brent, and that's one of the reasons the spread between Brent and WTI is actually contracted to under $6 at this point. That's pretty tight for that spread. But if those pipeline capacities get expanded, that will take a little bit of that sort of premium price for that discount WTI out of the market. And lastly, API coming out in a few hours, and we're expected to start seeing inventory builds both in API and EIA. Doesn't have to be this week, but as we see the summer driving season wind down, and as we see that sort of tightness in supply, we're going to see a little bit of crude oil builds if these pipelines move quickly. And if the summer driving season ends early this year, seems like that might be the case. Normally the seasonality starts to fall somewhere in late August, early September, but might fall a little bit earlier. We'll be watching that API and the EIA on Wednesday as well. This is Bob Iaccino talking about a down 1 3/4 crude oil contract from the CME Group trading floor in Chicago.